Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex and cryptocurrency trading analysis for July the 12th, 2021. So as we get ready for the new trading week, halfway through July already, can you believe it? So before we get into everything, we're going to show you our disclaimer to remind you that this video is for illustrative and educational purposes only. So this video is also in delay. Any of the futures, if we bring them up and talk about them today, that's obviously in delay by law, and also Forex is slightly in delay, even though we are doing this live, but there is a few second lag between our streaming this and sending everything out to you guys. Alright, if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And please share it and like it and send it out to your friends all around the Forex community. Alright, with that, let's get to our forex-trading-unlocked.com website, and we will see what's going on as the new week is shaping up right now. So for those of you that are just tuning in, we just opened up the markets a little while ago. We already have the workstation page pulled up for you on our website. And as you can see, we have just a little bit of action going on right now. There's not much to start this Sunday evening off, but I think that things will aim to please as we head into the new trading day and the new trading week coming up as we move into Monday. So we're going to first review the Euro US dollar for you here. Let me just get these charts set up right. Okay. Alright, that's good. That's good. Okay. Alright, so, alright, just checking the chat line here, making sure that everybody is set up. Okay. Alright, so we have the Euro US dollar here. On a daily basis, we have this market looking like it wants to rally up towards this 120.24 area, up towards this 120.80 area. This is the daily target as far as us having this buy signal here, which is a bullish engulfing line, high probable Japanese candlestick pattern, which if you haven't read the book, High Probable Japanese Candlestick Patterns, you should. Available on Amazon.com in paperback and Kindle versions. So we have this little buy signal down here. Let's take a look at what it looks like on the hourly. So on the hourly, we can see that we have been kind of just chopping along for starting the week off where we left off on Friday's trade when it was kind of dying out in the late afternoon. So right now we're waiting for the European markets to come online. Asian markets already are, so not much activity going on in the Euro US dollar. Let's go back to the daily chart real quick. So we are looking for this rally up to 120.24, but let's take a look about this 117.82 just in case things reverse. So we have the hourly chart here. And we have that support there. Okay, so the trend right here with higher move highs, higher move lows seems to be handling things right now. We're by attrition, we're going to come and test this upward sloping support line. The slope is pretty moderate. It's basically a 45-degree almost. And considering that we are almost a full basis dollar away from this key support here, I think we're okay unless there's some big news that comes out overnight. Or if the European markets really start to get hit really hard, I don't think we're going to see a big sell-off. Now, considering how the U.S. stock market ended up and how it seems like it looks pretty positive for the opening, unless Asia has a big sell-off or Europe does, I think that it's very likely that you're going to see a little bit of follow-through to the upside with the euro, meaning a little bit of bearishness in the U.S. dollar. So on the hourly, that's what we're looking at right here. You can see that we made a nice little bottom here. And as far as accelerating a rally, I wouldn't say it's been accelerated much, but we definitely had a good show of strength here. We held and chopped around here. Our correction back was, let's see, we had $1.1867 to $1.1824. So only about 40 pips over that course of a day right there. And what happened? Boom, we exploded right up, back up towards this key resistance area. So it does look like it's running into a little bit of trouble. on the hourly, so I would give it a little bit of time. I don't think you're going to have any real problems unless you fall below this area here. $1.1824 on the hourly basis here for the euro would be a very negative thing in the short run, at least on the hourly basis. It would have us off the rally train, where right now we're looking for resistance to be challenged most likely tomorrow on the daily basis. Let's go back to the daily thing here. So we're looking for a challenge of 118.96. Excuse me, a challenge here would help to accelerate buying pressure most likely as we make newer move highs. Once again, on the hourly though, this $1.1824 is your support base. If we do slip underneath here, it's likely that we're going to start to grind back and look for a test of $1.1782. If we can hold above $1.1782 and chop around $1.1824, then it's very likely that support will hold, and then we will start to see another poke at resistance again. So right now, it's not that the dollar is very bearish or the euro is very bullish. We just have a short-term corrective rally that definitely is in place on the hourly, and on the daily, it's trying to follow through. And if we fail to get above this $1.1896, well, then all we're doing is solidifying a lower move low, which we're coming off of over the last few trading sessions. And then if we do fail to make a higher move high and fall back on support, well, we're just following with the trend. So be cautious right here. If you're an aggressive bear, here's where you would be looking to get short right now. So this would be, here we go, on an hourly basis. So key off of this $1.1896. So on an hourly basis for the euro US dollar, this would be your key area of resistance, and also as far as risk as well, because if we poke above here, odds are we're going to start to accelerate with fresh buying coming in. All your weak shorts will definitely be out of here, and that's why I say for an aggressive short right here, to go contrarian with the trade right now, with the trend, this would be a good selling area. Not much risk there, about 20 pips. I would risk it basically up to $19.01, just to give yourself a little bit of leeway there. So that's basically 20 pips of risk, or excuse me, 30 pips of risk. Looking for this market to fall down, if you're a bear, to at least get down to $1.1824, okay, which would be at least 50 pips right there. And then if it fails from here, $1.1782, which would give us over a full dollar on that move. So to make risk 30 pips to make upwards of over 100 pips, that's actually not a bad reward to risk to reward ratio there. You're looking at a big reward, a lot of bang for your buck on the hourly basis. Okay, so that's where we're at with the euro US dollar. Now let's pump it up and go to the British pound US dollar and see where we're going today. All right, we made higher move highs. This one is a little bit stronger versus the dollar. The British pound definitely aimed to please the bulls for that currency cross on Friday. Today, as you can see, we're starting off and it's just kind of drifting. We did poke a higher move high. Let's take a look at the hourly. All right, the hourly, we know where support is down here. It's at $1.3741. This is the base maintaining this current show of strength. All trading above this here will have us in neutral to higher outlook, at least for the short run for the British pound US dollar. On the hourly, now be very mindful, this is a very steep trend to the upside. If it takes a while and we just hover at these prices, it wouldn't surprise me that we end up drifting higher. But right now in the short run, don't be surprised if we see a little bit of a pullback towards this 138.60 area. If it's just going to be a pullback, I would say that you're probably not going to go any lower than somewhere around this 138.25 to 138.06 area. That's where I'm looking as far as a support base on the hourly. If we fail from here, let's go back to the daily. A failure from here in this area here would have us pressing on these higher move lows that we've recently set, which are just off of these lower move lows, which would just mean that we've had a correction to the upside, and now we're looking to maintain the overall intermediate trend, which is bearish for the British pound US dollar. So going back to the hourly chart right now, it's kind of a rough one right here as far as anything. If you were a bull looking for a good buy, I'd wait for a pullback. Is it likely to happen? Anything can happen. So should we fall back into this area, I think that you're going to find support just because you had resistance over at this area and this was a breakout area. If we obviously fall below here, and if you buy it in this area here, you know that your risk is no more than somewhere around this $37.60 area, because below, anywhere trading below here has this market back on edge as far as on the daily basis. So 37.41 is definitely a big base. We are playing with higher move highs after a higher move low. But this just took us off neutral into short-term bull on, once again, the hourly. So I would not try and jump in front of this freight train as far as selling it. I would look for buying opportunities more than anything when it comes to the pound US dollar. So, all right, let's see what we got going on here on the chats real quick, guys. Just want to double check and make sure that we're not forgetting about anybody out there. Okay, just want to make sure that we get this shared out there. All right, we got that. And then we got this one as well. Let's get this and share that. Okay, so you guys are on the chat line. You guys are quiet, but you guys are paying attention, it looks like. All right, cool. So we have some people on both Twitch and on YouTube shining in here. All right, so we just finished the Euro US dollar and the British pound US dollar daily and hourly breakdowns, giving you a nice little heads up as to how this trading is going to start the week off. Let's go to the US dollar CHF. Pull up the daily here. The daily, as you can see, if the market fell out of bed on Thursday, Friday wasn't that much. It's kind of balanced out. It didn't follow through that much on Friday. And now you can see today, going into, which is now Monday's trade, actually. We've already rolled from Friday into Monday's trade for Europe. So it looks like they want to hold up, at least in the short run. I'd be very cautious of that. We have just made lower move lows in a big way after having made a lower move high. Not only did it take out the shorter term low from last week, it took out this low back here from the end of June. Is it overly significant? No, not necessarily, but I think you need to get above 91.98 here, so basically 92 even, to confirm any short-term support that really has you probably set up to drift all the way around from 91.98, basically 92 even, up to 92.63. Not a lot of play in that one. I think it will be a very, very choppy, tough trade should we start to get into that area right now. In the short run, I think, please check the gold. Okay, sure, Sparty Bus, haven't seen you in a while. Yeah, we'll check with the gold right after we finish the Swiss. How about that? So, once again, back to this one where we're at here. Okay, we have the US dollar Swiss that we're looking at here, and we have this target range of 91 even down to 90.60. So we have about another 42 pips or so to get down to our first target. I could see us drifting down into that area over the next day and a half to 2 days if we have follow-through momentum to the downside. Only if we get back above 91.98, basically that 92 even. Once again, do I see us being more in a limbo trade? So, but right now you have to look at the fact that we took out this upward sloping support line that was holding these higher move lows intact, and we even took out on the steeper means of things. If you want to go off of this low or even that low, any way you want to size it up, the sell-off that we had last Thursday into Friday has us not necessarily overly on edge, but definitely has us in a short-term bearish mode. The intermediate to longer-term trend is bearish. We've only been in an upside correction. It would take a turn of events back up above 92.63, breaking out to the upside to really confirm any real solid strength. Let's clean up that line right there and make it a little easier for you to see. All right, so on the hourly, what do we have? This one's just grinding lower. We're not looking for very much. Once again, unless it gets above this 91.98 area somewhere here, I think we're just going to drift and then look for another test of support. So not overly bearish or bullish anything when it comes to the Swiss. All right, Sparty Bus, let's get to your gold contract here. Now, you guys who are paying attention here, if you're wondering why we're looking at gold, well, when you look at Forex currency markets, well, gold definitely has an impact on currency pricings, and also vice versa. So, all right, let's take a look at what's going on with the gold contract. We've had a nice little rally going on. We'll go to the monthly. You can see how things have shaken up over the past few months. If you really look at it, we've just been chopping around for the most part. We do have a nice bounce to start the month of July off, coming off of a higher move low set back in June. All right, so overall the trend, if you go back to August of 2020, this market has come off of a higher move low, lower move high, lower move low, lower move high. So this is pretty critical as far as on the wave theory is what is going on with gold. So as far as a real big confirming breakout to the upside, back above 1914, so basically $1,915, this would be the area where we're looking for an accelerated rally as far as on the longer term. Now if we take March 2020, we'll use that as our base low for holding the trend. We didn't come down to this upward sloping support line, excuse me, got a tongue twister there. So this it fell short of hitting this back in March of 2021. We've been rallying up since then, and then we ran out of gas in June. I think that we're going to see, if you notice how we've been basically in this range here for gold for a while. This is probably where we're stuck for the next couple months. At least I would say through the summer. So I would say that right now, Sparty Bus, we're looking to see gold rally back up towards this upper resistance band. We are coming off of, let's go now to the weekly. If you see this, we had planted this low back here. We are coming off of this high here, and 2 weeks ago we set this low. Once again, 1755, this will be our base. If we fall below that, then I think you're going to see gold have a good chance of coming back down towards the 1680 area. Is it going to have an extreme sell-off? Probably not, but it does have a good chance of riding support should it take out these lows. Now, if we start the week out pretty strong and start to get back above 1840, well, that's a key area, because once we start to get back to 1840, it's not that it's just not that far away from 1914 and higher move highs, but then it looks like, especially if we start to trend up to that area, that on a weekly basis we are going to maintain this short-term uptrend. So on a weekly basis, we definitely have a short-term bull going on. Obviously longer term, not so much. Now let's go on to the daily basis. This we are a bull. We've been watching it slowly grind higher over the past couple of weeks. Does it look like it's running out of gas? Not necessarily. This is probably just a consolidation zone. So as far as range traders, you're probably going to be having a delight in between this little area here of basically 1860 down to 1795, 1790. I would expect it to start to snake along here. If we breach 1860 and get up above there, or excuse me, 1816, that would be a good indication that we're going to start to get more buying momentum into the market. Remember, there's a lot of things going on right now. Crypto markets are winding their coils. They're getting very, very narrow. A lot of big money is sleeping on multiple markets and asset classes. This is not just because it's summertime or we're coming off of a holiday trade in the U.S. from last week's 4th of July weekend. It's just a matter of it is what it is. And big money doesn't sit idle for very long. So breakout one way or another is going to occur. So right now we are short-term bullish when it comes to the daily. Let's look at the hourly. Hourly, kind of looking good right now. I would say if you are Sparty Bus, if you're long gold right now, whether you're in futures or some other thing like ETFs, or there's multiple ways you can trade gold, even spot gold. All right, so on the hourly, I would keep it kind of tight like this. We have this upward sloping line off of these two higher move lows. I would say that by attrition, no matter what, you're going to dance into this no matter what, somehow over the next few hours into tomorrow's trading. But if we can get another rally above the high from an hour ago, that's pretty big, because we came off of here, we started trading down, we made this in the shorter term sense, in the hour, in the half hourly sense, a higher move low, lower move high, now a lower move low. So the question is is, are we going to maintain that posture? So on the hourly basis, we're looking to find support somewhere between 1800 and 1860, somewhere in this area here, and get this market to turn itself around. I would use caution as far as I would look to buy lower. I would be very cautious buying it into this area here. Now, obviously, if we can get above 1810 here on a half-hour basis, I think we have a very good chance at getting some fresh buying momentum that could probably get us back up to 1815, 1820, you know, at least in the short term on the hourly basis. And once again, if we take out that 1815 to 1820 area, that comes over this big pivot here, which would most likely also add to fresh buying momentum as well. So we are short term on an hourly basis and stuff like that. We're looking for a nice little break to buy. We have a bias to the upside. Once again, on an intraday basis. Once we get into the daily basis, it's looking more sideways. But once again, if we can get above that 1815, 1816 level, we're looking for a nice little run higher. As far as lows, only if we fall, I think, below to 1795 there, Sparty Bus, are we going to get bearish, in which case then, well, then it could get all the way, it could chop around all the way down to 1755 before it runs out of gas. But I wouldn't be overly bearish gold right now. I would say be more neutral and look for breaks to buy, you know, especially with the bond market going up. In fact, that's probably a good idea, since we're talking about gold, that we jump on and look at that. So on the forex-trading-unlock.com page, you can always go to markets here, go to futures, and when you pull up the futures page, once again, futures are always in delay. Nice thing is today is Sunday night, so we're not looking at anything fresh yet. The markets are open electronically, but nothing's really happened yet. Okay, so we have the 30-year Treasury bond here, which has been rallying. I had a little sell-off on Friday. Now, it's a big deal that if you notice this, how this market's been going sideways, and now it's starting to inch higher, make higher move highs and higher move lows. Once again, look at the gold market here. This one on a daily basis, see how this is starting to grow here. We bottomed here, what was it, somewhere between the middle of June and the end of July. So the middle of June and the end of July, that's here, these price points here. We had this big sell-off. This was scary a few weeks ago, how this market came all the way up, exploded, and had this huge range. This was all on a night like tonight, basically trading into Monday, and it all happened over a few hours. It happened from basically 2 o'clock, I think 11 o'clock in the morning Chicago, or 11 o'clock at night Chicago time on Sunday, going until about 5 o'clock in the morning Chicago time. So as the European markets opened, we had big movement in the 30-year Treasury bond. So for those of you who are wondering why we're talking about bonds and gold, oh, you're welcome there, Sparty Bus. This gets into the strength and weakness of the dollar. So with bond futures rallying, and especially if gold continues to follow up with this, I would be very leery of being a dollar bull. You're most likely going to see dollar weakness versus the euro, not much. A little bit versus the Swiss, not too extreme there either. The pound is where I would use caution. That's the one where I think you're going to see a lot more weakness. US dollar JPY, this is important that we start to go over to this trade zone since we talked about gold. Gold definitely is something that influences also the Japanese yen. With this rally in gold and also the rally in interest rates, it's going to be hard for the US dollar yen to stay in a bearish fashion, which it is only on the short term, on the daily basis. But we have a short-term buy signal that is starting to emerge here. And we'll see what happens with today's trading. If we get a positive close on Monday here, which especially if it closes up somewhere around this 110.5 area, that would be a very good indication that this market is going to make new highs and start to really go up towards 112.5. So there's a potential for a monster rally in the US dollar yen. So why is that? With flight to quality going into the gold market, with flight to quality going into the bond market without any intervention and things like that, that puts pressure on the US dollar. So there's an inverse relationship between bonds and dollars. So as bond prices go up, or 10-year prices go up, 10-year notes, which most people look at more than the 30-year, that's a mistake, by the way. The value of the dollar goes down because the interest rate on the currency goes down. As bond prices and note prices go down in price, interest rates go up. It makes the dollar more attractive. So in the short run, we have a bounce. We had the sell-off with the yen, but as far as with the gold tanking and stuff like that, or rallying also with these flight to qualities, you're going to start to see it impact the dollars versus a lot of currencies except for the yen. When the yen, when gold is rallying and bonds are rallying, there's, for some reason, there's typically an inverse relationship with the US dollar and the yen. So ironically, on Thursday we tagged, this was a sell signal. This was a bearish engulfing line sell signal, which occurred on July the 2nd. So once again, if you want to learn about how to trade bearish engulfing lines, read the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com. You can always go up to our navigation bar here on Forex-trading-unlock.com, pull up products, courses, and services, and then hit the High Probable Japanese Candlestick Patterns link. It will give you information about the book and give you a little insert or excerpt on it. So as far as targeting, we hit our first initial target. We did not penetrate into our target zone where we wish to be. That's kind of a disappointment. We really want to be more lower down towards 109.06 off of this retracement. That it would be healthy. If you notice that this trend has been very strong overall on a monthly and a long-term basis, the US dollar yen is in an uptrend. There is no indication on a weekly or monthly basis to give us any reason that we're going to change that trend. So even if we have a dollar bear going on with the euro, the pound, Swiss, every currency in the world, it wouldn't matter. Right now, the US dollar yen is looking, you are in a buy break situation. So I would be very cautious being a seller into these lows. If anything, I would be looking for either another break to buy or get ready for an explosive move to the upside, especially if we get back above this 111.5 here on the longer term. It's going to get crazy. Just to give you an idea, monthly, you can see that we are negative on the month of July, but overall, we just made a higher move high even though we're negative. And we're not done with this month, folks, so don't think that just because it's looking negative right now, never jump in front of a trade. This is a monthly signal, a monthly bar that's not completed. It is not a negative month yet. It is just down on the month currently after making a higher move high. You can see it's been rallying since the beginning of the first of the year. This came out of a big downtrend. It busted out to the upside, and it is trying to make higher move highs from where we set back in February of 2020 when this market was getting ready to break out to the upside. Then shabam came the beginning of the onset of the pandemic. Obviously, since then, you could see that after that radical trade that things had balanced out, and now it had formed a higher move low in January of 2021 as we started the year off, and since then we are looking to make higher move highs on a longer term basis, but we have in the short term basis on the monthly. All right, so we're very bullish long term. Daily we are still bullish. We're falling through this little channel line here. This was a good support line holding up this channel that we've been trending in for the past couple months as we make higher move highs and higher move lows. This has been working out really well for us. So, and now we're looking for, once again, a buying area and then for us to get a nice rally. So on the hourly, this is also confirming higher move highs and higher move lows. Doesn't mean we can't fall back on support, but odds are very good that we are going to continue to test resistance and make a run for higher move highs. And be careful, because if this does explode to the upside, it really will explode to the upside. Australian dollar, US dollar, this is a whole nother ball of wax here. It made a lower move low on Friday. It ended up positive. Did not give us a buy signal. Today you can see it's slightly lower. This market is just in its own little world, and I would use caution. Is it possible we get a rally? Absolutely, anything's possible. Key resistance in the short run is 75.06 to 75.28 in this little area here. Above that, we're looking to challenge 75.99, so basically 76 even. If we can breach that, we make higher move highs, confirming at least a short-term bullish reversal of this market, and then we're looking for a challenge of the 76.5 up to 77.09 area. This downward sloping resistance, though, I think is going to keep this rally at bay. So the sooner it rallies, the more likely it is to get higher. The longer it takes, the less likely it's going to make higher move highs. This market overall, besides technically, fundamentally, is in the doghouse versus all currencies, with the new lockdown measures being put in place into Australia. And as far as how their economy is looking to go, as far as moving forward into the new year, or the rest of this year, it's not looking good for them on not just a political level, but also a geopolitical level with their dealings with China, and then also as far as their industries and the lockdowns and the impacts of the pandemic and what it's doing to their industries and their economy and the whole country at large. So I would look to sell rallies no matter what. Should we get into this area, I think you're going to have a very good selling opportunity, and I honestly believe that you're going to see this market to trend. Now, this has been trending against the dollar and been strong for over 14 months. It reversed in May. This is the beginning of what I believe to be a very big reversal of fortune for the Australian dollar against all currencies as a whole. I'm sure there's some that the Aussie will be strong against, but as far as all of your major currency crosses, I think if you're already in that trend, it's just going to be amplified over the next 3 to 6 months at least. And then in other major markets like the U.S., where it originally looked like it was just a corrective move lower with dollar strength. Now it looks more like it is the beginning of a longer-term super trend that's going to be a bear market for the Australian dollar, U.S. dollar. And that's even if the dollar becomes a bear versus many other currencies. As far as the Australian dollar, it looks like it's going to be in trouble. New Zealand dollar, U.S. dollar, not quite trading in tandem with the Australian dollar. It made a double bottom low on Friday here at 69.22 to be exact. Today it's falling back a little bit on support once again. This market I don't think is going to be the same as Australian dollar. It did not make a lower move low like Australian dollar has. It's been chopping around. It made a higher move high. Now it's double bottomed. Double bottoms happen every once in a while, and this one is to the pip, believe it or not. So we'll see if that support holds up. So the big thing is here is a 69.42 down to 69.22. Definitely a failure from 69.22 has this market on edge, making newer move lows. I do not think you'll see an extreme sell-off here like you will with Australian dollar, though. So that's something I would be very mindful of. As far as buying against the 69.22, 69.42 down to 69.22 area here, I think that's a good base of support, low risk buy. Looking for at least a sideways range trade back up to 71 even, 71.10 area. I think you will start to run into resistance at 71.18 and 71.65, most likely setting a range, and especially unless you have major dollar weakness against other currencies, it's unlikely that you're going to see a monster unless you see very big dollar weakness versus most currencies. I don't think you're going to see the New Zealand dollar get much higher than this area right here. But we'll see what the conditions are should the market actually trade up into this zone. Now, a failure here from 69.22, once, twice, 3 times the charm, it's all over. We're looking for new lows all the way back down towards that 68 even area. Could be a big drop. That would be something that I think would only manifest itself if we have a big dollar bull that arises. All right, U.S. dollar Canada for our last Forex cross before we hit the cryptos. We have U.S. dollar Canada here in a little bit slightly positive trade here. It came off higher move highs from Thursday. Friday it had a nice sell signal. This here is a bearish engulfing line sell signal. Once again, you can learn about how to trade that by reading the book High Probable Japanese Candlestick Patterns, available on Amazon.com, written by yours truly. So check it out. Anyhow, so a little bit positive here, U.S. dollar Canada. Overall, this market isn't a big-time bear. This upward sloping support line is holding up the short-term bullish correction, which is what we're looking at this as. If you see this downward sloping resistance line, this resistance line goes all the way back to the high set back in March of 2020 when the pandemic first really started to explode. Since then, the U.S. dollar Canada has been in a free fall. This is being only viewed still as a correction, especially with this sell signal here. We are looking for at least a test back of $1.2299, so basically $1.23. A failure from there has this market on edge as it takes out this upward sloping support line. $1.2230 I think is your extreme for any big sell-off. If this is just going to be a neutral trade developing, I do not see a bull coming out of here very much so for the longer term, at least not a very big major one. In the short run, we're coming off of higher move highs. We are in a short-term bull market. Let's look at the hourly. Hourly, higher move low, lower move high, lower move lows, lower move high, lower move low. We're making a lower move high. Hourly right now, things are looking kind of weak. Same thing on the half hour. Daily, we're a little bit positive, so I think this is just a little bit of profit taking coming off of the big sell-off from Friday, and we capped out on Thursday there. So we've had a nice big move to the downside, which you don't really have much of on this chart recently because we've been rallying for the past month and a half. And I think this is the beginning of it. Very likely that we will at least consolidate back down towards this 123, even 122.30 area. So that's the US dollar Canada. Let's go to the BTCUSD. All right, we got Bitcoin here on the map. What do we got going on here? It is wedging and wedging and wedging. It's going nowhere, folks, right now. You got to get above this 36,800 area for sure, confirming an upside breakout that puts us back in the lower 40,000 handles. And as far as to the downside here, we have the 28,250 area pretty much as our support base. If we fall back below 28,000, I think you're going to see this market definitely start to probe into the lower 20,000s. It's very likely that you have a lot of people who did buy into this up in the upper 50s and lower 60,000s for their investment that may be taking enough heat to where they're like, okay, I've lost 50% or more. It's time for me to take something out before it goes to zero. It could go to zero. Who knows? Is it a bad time to get out? Would it be a dumb decision? I don't know. It depends on if Bitcoin never rallies again. It's a genius maneuver. If Bitcoin gets thrown under the bus and disappears, which I don't see that happening anytime soon, that would be a problem. But it isn't going to happen most likely in the short run. I think you're just consolidating, and right now you do have a big problem because a lot of big money that would be still in this market, like they're not selling out of it and they're not adding to their positions either because they're in for a lot at higher levels. So as far as the people who are willing to sell, I think that the people who are willing to sell, they definitely want to go back up to the $50,000-$60,000 level before they start doing that again. So I think that you have this indifference of major buying and major selling, which means now you only have retail players coming into the spectrum here, and a lot of it could happen also that as we do start to see the growth of all these other coins, that there's a stabilizing in price of Bitcoin. Who knows? Maybe if it starts to fluctuate in the $10,000 range for months, it could very easily do so. It's still a new market. Anything can happen. As far as right now, we don't have any reason to expect it to do anything more than go sideways. That's what it's been doing for the past few months. So why not continue the trade until we break out to the upside? It is wedging, but that's by attrition. So unless we see, like I said, above 36,000, then I see some momentum building. So now let's look at the XMR US dollar real quick. We have the Monero here doing the same thing, but looking like it wants to add a little bit of strength on the day. So we'll see how this happens as Monday unfolds here. I do like the technology for Monero, so I think in the longer run, there's a good chance that Monero can outlast a lot of your altcoins and a lot of your cryptocurrencies out there, just because of the value of the technology, as long as the technology stays very relevant. In the short run for processing of payments and a whole bunch of other things, we're not going to get into technical mumbo jumbo on it. It does have a lot of promise. It does have a lot of promise to last for years to come, in the event that technology doesn't totally supersede it. And at the rate that technology is advancing, especially with quantum computers, I think it's very likely that a lot of these coins, should their future really be secure, they're going to evolve themselves. So it'll be interesting to see if that does occur, and if that is the way that they can sustain their technology, because this is one that, at least in the short run, for the next few years, has a good value to where it's trading right now at 200. I could see this easily get back to its highs of around up by the upper 400s, lower 500 area. Above there, then it comes is how's the pricing and where's the value. So, but I do think in the long run, as a investment, it is pretty good as far as a crypto having longevity and the ability to pay off as an investment. Ethereum is also another one. It does have a couple holes in it, but the technology seems to be really useful, especially with now it's being added on to it and used through the Ethereum network and what have you. It does give it value, but now also the more you fractionate these things and these things happen, it might be that these things are causing these cryptocurrencies to stabilize now to where you were used to seeing these things fluctuate in hundreds and thousands of dollars a day in ranges, where now they're going to start to fluctuate perhaps in maybe just hundreds of dollars a day, maybe even only like $10, $20, $30 a day. And maybe the spread between where this market is going up or down, whether it is a bull or a bear, will remain tight, and we're not going to see as much volatility as we have seen as these things become more useful and these other things start to come into mainstream use. That's one of the things that could really happen, especially as you start to find out how these things work as payment processes and data collection and moving things and securing risk in multiple different ways, where if this does take hold, it should help, I think, in the long run, start to stabilize a lot of these earlier cryptocurrency coins out there. All right, so we've talked about these three. Now let's go and talk about the DOGEUSD, because everybody wants to know about the Doge. The Doge is a dog, and I think this one is a dog overall long term. I would take the money and run as soon as you can. Once this market gets above wherever you own it, take some profit, get out of all your original investment, and just let whatever you're up ride, whatever little bit is left. This one, the technology just doesn't seem like it has the longevity and the likelihood to survive. Also, it doesn't seem like it has the adaptability as well. So I think it's more of a pet rock, pump and dump meme stock that just happens to have been in play. You got all the kids that love it. It's marketed well, and the thing that really scares me the most is seeing billboards and advertisements now about investing in Dogecoin. No legitimate asset is ever advertised. It just doesn't happen. You don't see people advertising for you. You have advertising for you to buy Coca-Cola. You do not have advertising for you to buy Coca-Cola stock. It just doesn't happen. It's not legal. It's not what you do with regulated products. These obviously are not regulated, but that's one of the reasons why you don't do it with regulated products, because that's how you pump and dump. It gives false perceptions, false marketing, and false information. So that's what I think this really fits into. We'll see what happens. There's a lot of whales. I think this is another thing with a lot of these cryptocurrencies. They own this stuff at the highs, near the highs, looking for that big jump to the upside. Is that going to happen? Who knows? It could. We could be waiting on the next wave for the pandemic to escalate once again too, and then all of a sudden these things scream to the moon. Maybe that's what they're waiting for. It's probably what a lot of what the crypto investors are waiting on, is another wave with the coronavirus, and we'll see how things pan out with that. So there will be winners and losers no matter what. So as we've been talking, here we have the Euro US dollar. Slightly higher on the day, not much going on as far as the range. We'll see how things manifest over the course of the next 24 hours. We went over all these signals. Thank you guys for your inputs here. We appreciate you guys hanging on. And for those of you that are still there, don't forget to check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. If you're an Amazon Prime member, you can read it for free, I believe. And also subscribe to our YouTube channel at Twitch or YouTube if you have not done so. Leave questions and comments and criticisms on our comment section. We will reply to you, and we will try and incorporate any analysis you're asking for in our next video. So with that, good luck with all of your trading. I'm Teddy Keckstedt from Forex-Trading-Unlocked.com. And you guys